Summer, at least in North America, is expected to be a quiet affair. But going by the events in August, it has been anything but. Starting with in the month of August, the news tape has been dominated by the US pullout from Afghanistan. Then it was the Hurricane Ida that hit the US East Coast. And in Canada, we find ourselves in the middle of an early election campaign. So there is a lot of things to cover in this update, which is unusual for the month of August, but we'll get right into it. Greetings, my viewers. You are watching Aman Sangha, Independent Financial Advisor in Mississauga, Ontario. For my update for the month of August, I will break it up into three parts. We'll start by looking at how the indexes have done till date, and then just compare where we are finding the relative valuations, and I'll specifically be honing in on the emerging markets index. Then I talk a bit about the US. I talk about where the S&P has been, what has Fed come out with, and what's the jobs report tell us. And lastly, I'll hone in, which is not a big surprise, on the biggest macro threat to the economy in general all over the world. So let's get started by the index returns. And you can see the equities have had a very good run in general. The bonds have pared some of their losses from earlier part of the year. The only thing that's kind of holding the equities back right now is the emerging market index. Now, if you've been following my updates, I have been allocating portfolios into the emerging market index, but this is probably the only index in equities that hasn't done well. And I was asked the question, why this, and does it still continue to be by one of my clients? I want to address it by saying that the emerging markets has largely been dragged down by China, which composes about 1/3 of this index. And China has come down hard on tech, and that's driven down the market valuations there. But this is a part of the churn. Hopefully it should settle out. But the bigger question is the valuations. When you look at it as compared to S&P 500, this is for the TSX, even with the fantastic run that TSX has had this year, it's very attractively valued as compared to S&P. But the same also holds for emerging markets, which are trading at almost record lows when they're compared to S&P 500. So in the short run, I think there are some challenges, but long run, and given the pressure on the US dollars, I am still optimistic that this is the place to be for a certain part of your portfolio. With that, let's move on to the second point. We'll come back to US, and there are a few things that I wanted to cover. First, we'll start with S&P. Now, August 21st was the time when S&P basically doubled from the lows it hit in March 2020. So it's been quite a run. This is the shortest duration of time what it has taken S&P to double, and that's a record. And with that, the rest of the news that follows is not necessarily as good as it gets for this one. So we'll start with the announcement, which was much anticipated, coming out of the Federal Reserve Jackson Hole meeting. And basically what it could be interpreted anyways, but generally it has been interpreted to say that the taper would hopefully be done by the end of 2021. And it'll be a while before we look at any rate hikes. Now, just to that point, post the Jackson Hole meeting, we did have the job reports coming out of for the month of August. and the job growth had slowed down significantly from the previous months. Now, we do know that there could be one-off month, so we'll have to look if this is a trend. But if this is indeed a slowdown, then the taper might be off the table as well. But just to summarize the US economy parts, it's now widely believed that it'll be lower for longer. And how long it is, just given the context of inflation, is something that we'll have to monitor and observe very carefully. Lastly, I want to go back to the biggest threat, macro threat to the world economy. And I'll start with Israel as an example. Now, this is a country that had done everything right. They were out of the gates with the vaccination, have most of their population vaccinated, and they did away with the masks and the social distancing guidelines. And we are now seeing that the cases are starting to spike up. That doesn't necessarily mean hospitalizations, but the cases are going up. And the same we are seeing in the US, where there is a different tug of war going on between vaccine and anti-vaccine, but that's a different story. But we are seeing a fourth wave take shape in different countries, including Canada, where we seem to be right now in the middle of where we were for, or almost up there in the middle in the third wave or the fourth wave. And just if we come back to Canada, we see most of this focused on Alberta, and the other provinces are still not as bad. But the fourth wave is out there. Now I'll flip back to US, and you can see the difference. I mean, this talks about the hospitalizations between the unvaccinated and the vaccinated, and you can see the huge difference that the vaccination is making in terms of hospitalizations. So this is COVID is not disappeared yet. It is a big threat. It continues to be a big threat. So far, we are not seeing an impact on the mobility. This is data out of US. But if hospitalizations continue the way the cases continue to rise, we see we could have a prospect of another lockdown come into fall. So I'd just like to conclude by saying that COVID could throw the spanner into what is generally believed to the best quarter for stocks. How it unfolds, it'll be interesting to watch for the next 4 months. But COVID is and still remains a biggest factor as a threat to a full economic recovery and going back to the kind of life that we were used to pre-COVID. With that, I'd just like to summarize, say happy Labor Day to all the viewers. The sun's out there, it's warm, so enjoy the weather while it still lasts. And thank you so much for watching, and I'll be back in October for my September update. Bye for now.